Welcome to Second Take, the show that focuses on the issues behind the news. It's a bleak start to the new year as cash-strapped coal developers and broke miners plague the mining industry, with various companies applying for voluntary administration and suspending their shares on stock exchanges. Mining Weekly editor Martin Creamer unpacks the issue. Welcome, Martin.
Thanks, Shannon.
Some coal mining companies have announced the suspension of their shares on the JSE and other stock exchanges, owing to their failure to secure long-term financing. Can you elaborate on that?
Yeah, the junior mining sector is going through a tough time. You know, the juniors often live from hand to mouth. They will go to a stock exchange and they will raise capital, and then they won't go back until they've virtually used up that capital, so it comes in small increments. And often, you know, the market appreciates that because there is risk with juniors, and you want to sort of give them money as needed. Unfortunately, this has coincided with a terrible collapse in the commodities market. And iron ore is probably the example of the worst collapse. So we don't have that terrible situation in South Africa that you see now in Australia, where the government has already come in with assistance for juniors, saying that, look, we will assist you over this period and then you pay us back over a period of 2 years. They're doing deals there because iron ore is a very important commodity in Australia. Coal is another commodity that's being hit, and on both sides, it's the coking coal and the energy coal. And you see people in that space going to the stock exchange saying we cannot continue, we cannot pay our debts, we are having to suspend our shares, we're calling in administrators. Or you've got the case of antimony and gold in Limpopo, where a village which is listed on the Johannesburg Stock Exchange has called in practitioners who will try and apply a business rescue. This is a new thing in South Africa. We never used to have business rescue. People would go into liquidation, if they had struggles and couldn't pay their debts. There is a situation where Cons Merch, which is part of that antimony mine in Limpopo, it said, look, it can't cover its debt commitments. It wants to go into business rescue, which has happened. In the past, they'd have to go into liquidation. So there is an improvement from that point of view, and there are companies around who are practitioners with expertise trying to keep businesses together, but they soon realize whether they can or not. When they get to a hopeless case, you'll see an announcement will follow that this has got to go into liquidation. And what has happened with these juniors, because South Africa isn't noted for as a stock exchange area where they get funds easily for junior activities. Our stock exchange is used to the big and the powerful, and juniors are normally associated with Australia and with Canada. And the AIM in London, we see a lot of the companies on the AIM and on the ASX, they have come to South Africa. They're South Africa focused, they're coal focused, but they've raised the capital in these external stock exchanges. And we find Zale, which was active in KwaZulu-Natal and also in Mpumalanga. They have voluntary gone into administration. They've told, the various stock exchanges involved that has happened. We also see that with Beacon Hill, which is operating in this region. It's got coking coal it's more Southern African focused than it's Mozambique. They have told the London Stock Exchange that they've got no way out. They're going into administration. Miranda, last year, Miranda Coal, headed by John Wallington. I mean, he's really a fantastic, leader and a very good person in coal. He had to put Miranda in because most of these activities you'll find behind the scenes, they've been trying to sell, because often that's what juniors do. They explore, they do all the hard yards, they firm up what is actually in the ground. Then they look for a big buyer and they go elsewhere and start again. That is their role, a very important role. They take high risks, but then they want high rewards, when they sell. Those rewards just haven't been there this time around because of this commodities problem. Now, hopefully it won't persist for a great length of time, and I'm sure we are not seeing the full extent of this anguish. We're also just looking in our region, whereas if we had to look on the Toronto Stock Exchange and also to look at coal, say in Australia and elsewhere, we'd find similar anguish going on. And the coal price is probably to blame, and also the price is reflective of a lack of demand. And we see, even with oil and gas at the moment. The price is well down, which is wonderful for importing countries like ourselves. We see our petrol price go down. But really it's a reflection of problems in the world. And so we're in a problematic phase at the moment, and it's not pretty.
Could government's possible declaration of coal as a strategic mineral play any part in resolving this issue?
Well, I think it would probably frighten them still further, because the moment you use the word strategic, they interpret it as being a lower coal price. They will interpret it and say, oh, Eskom needs coal. Eskom hasn't got cash. Eskom wants this coal at a low price. They'll run for the hills, That's the sort of interpretation usually given to strategic declarations by government. And we've had coal mining operations here worried about those statements coming from the lips of politicians in South Africa. They don't quite like that. They like the market, but you can see even the market lets them down. And the market is letting them down very badly at the moment. And we see left, right and centre. They're tumbling and calling for help, suspending their shares on stock exchanges, telling people we're unable to raise any capital. We also have a lot of hostility from shareholders. You can see in the case of Beacon Hill, shareholders very angry. I don't know what's going to happen there. They're claiming they're going to have a class action. They're going to take people to court. I feel it's quite harsh on some of the managers, because they're having to face the situation where you can be the best manager in the world, but if you are a price taker and not a price maker, as we know is the case in mining, you take prices, you don't make prices. You can be the best manager in the world and still fail.
What's the outlook for coal and other mining industries in 2015?
I look to the lips of Peter Freiberg, of Glencore. It's a very big mining operation, huge in coal. The biggest exporter of coal, that's seaborne coal. They're traders. They watch this market very, very carefully. I know his background. He was active in Anglo-American here. He was also with Extrata Coal. He is well versed in coal. I always watch what he says. He says that the coal price before the end of 2015 will have firmed up. And in the meantime, people should exercise innovative activities. Well, of course, big companies like that can play the domestic market and the export market. And you can see, because of the situation in coal at the moment, sometimes you get export parity prices domestically because of the way the coal price has fallen. You can probably get at home a price that you might get outside the country, and those prices outside the country are normally higher, but then you don't have to ship and you don't have to transport to the same, so you get that benefit. And I can see the bigger players playing between the two, because of course domestically in South Africa, we do everything on coal. We sit here under a light courtesy of coal. In fact, when we pull up at most of our petrol stations here, we drive on coal, because that is Sasol converting from the coal into petrol. And even when we take off at OR Tambo, sometimes we're taking off on coal, because Sasol has also got aircraft fuel that they've managed to make from coal. So we are hugely dependent on coal in South Africa. So there is opportunity in South Africa because of the big demand to play the domestic market and to play the international market in these times of low prices, and maybe look for an export parity price locally, so that you can have a bit more of a margin every now and then, and to keep you going during this very tough period, which could last, to the fourth quarter of 2015. Hopefully it'll firm up a little bit. Peter Freiberg is saying that market forces will show a tightening of the market. It'll harden. These soft prices will get harder progressively as we go into this year, and that it's not as bad as iron ore, which seems to be worrying a lot of people. And for some reason or other, there's still huge supplies of iron ore coming out onto the market, which could mean that massive drop last year of more than 50% persists. Some people say that it's going to go on for the whole of this year, which would be quite horrifying. Although I noticed that Vale in Brazil they are saying outright it'll go up, it'll rise from its low level at the moment, between $70 and $80 a ton by about 24%, they believe, this year. And we can see that they're getting, the frowns are coming off their foreheads. It looks like they're prognosticating a better iron ore price. In the meantime, we see these juniors struggling as we start and go into this new year. They're just falling like ninepins.
What are the chances that bigger companies will take them over?
Well, what is happening in the cases of two of them, I noticed with Zale, you found a lot of the people who were owed money took certain assets over which they had guarantees. But I noticed that Zale is concentrating, they're keeping one of their flagship assets because they will then, now they're off the exchange, concentrate on at least one asset, and try and build that again. And the same with Beacon Hill. They are looking to not put the actual Mozambique company that has the asset under administration. So the company goes administration, and then they try and concentrate on doing something with that asset because it was close to actually yielding. And I think some of the people who are owed money there, in terms of the agreement, it's quite horrific that although this asset could be worth more than $1 billion, the actual agreement states that if the debt is not paid, the person who provided that senior debt can take over this asset for $1. Now that would be quite a fantastic asset at that price. But I see they're trying to rally to keep building the asset, so maybe that won't happen. But you can see that when you borrow money and you're quite desperate, sometimes you sign things that can put you into a very punitive position if all the chips are down, as we see in some of the cases. And perhaps people could pick up bargains. I know that people in gold mining, one of them is Randgold Resources. When you ask them whether they're acquisitive, they say, no, we are discoverer and developer. But if situation persists now in gold, you might get such bargains that it would be silly, just to keep developing. And they're saying the time is not right yet. You've got to wait for people to really collapse. So the strong probably get stronger during these times, but you feel for the weak who have really often done some hard yards and they're not getting any reward.
Well, we wait and see.
Yeah, we'll look at this space, and I'm sure 2015 might see more blood on the ground before we actually get back into steady state. Those two words are magical, but hardly any industry at the moment is in steady state. And the whole world is in a bit of a turmoil. So we're all hankering for those steady state years. It will be great to get back to them.
Thank you very much, Martin.
It's a great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.